understand the money, understand the manipulation of money, understand what the problems are with fiat currency and debasement of it. And then you'll understand why Bitcoin. So that's the first thing, and once people can understand that, it's a small bridge to understanding why Bitcoin, and most of them will make that. They'll understand once they understand what Bitcoin really is. They'll make that small walk across that bridge themselves. They'll be like, oh, no wonder. Okay, now it makes sense to me.
James Lavish opens with a stark observation. Most Americans are blind to the need for Bitcoin, not because they're uninformed, but because they're insulated. They live inside the world's dominant financial system, where the US dollar is the global reserve currency. You can spend it almost anywhere. Its demand is unrivaled. And for many Americans, that comfort breeds complacency. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue. Even when inflation soared to 9% and eventually fell to 3% at least, officially, the average American stayed relatively unconcerned. Why? Because they rely on mainstream narratives that often downplay or distort what's really happening to the dollar's value and long-term purchasing power. And while other countries feel the ripple effects of US monetary policy in real time, Americans continue to trust a system that's quietly eroding their wealth.
We're here in the United States. We're US-centric. We use the US dollar. The US dollar is it's the global reserve currency. Everybody uses dollars. You can take your dollars and go anywhere in the world and they'd be happy to take them. Everybody wants dollars. And even in those nations that I'm talking about, they want dollars, but they don't have access to them. They have easier access to Bitcoin in lots of places. So that's the crazy thing. Here, it's more like, well, we have dollars. We're the global reserve currency. What we don't need to have, like, who cares? Yeah, inflation's 9%. Who cares? It's coming back down. Now it's 3%. Not really, but you know what I'm saying. So here, the issue is you've got mainstream media that ignores it, that will misinterpret it, will misreport on it. And by and large, people here in the United States have, a lot of them just don't think for themselves anymore. Unfortunately, we're seeing it, I mean, we've got a presidential candidate who wasn't even nominated, so it just gets crazy. Like the system is wild. And so, but they listen to mainstream media. They get their news from it. They get their research from it. And that's what they're looking at. And so they're kind of ignoring it as a viable separate asset class. They don't understand it. And so understanding is very low here across the board. Now, that said, it's low because people are still treating it like an investment, like a speculative asset. Okay. I understand that. And it's going to continue to be like that until it gets big enough to kind of obliterate that narrative. However, how does it evolve? Well, now that we got these spot ETFs, what's important about that is that institutions can buy it now much more easily than they ever have before. Like, it was almost impossible for institutions to buy Bitcoin before. And we get this question all the time: well, why wouldn't they just buy regular Bitcoin? Well, they can't. They don't have the ability to. There's no function for them to do that because they're in an institution, which means they have this portfolio. You're a portfolio manager. You answer to an investment manager, your chief investment officer, answers to a board. If you're at a pension fund, or if you're in an endowment, like, you can't just go and buy this thing that's so-called speculative asset, because it's not like a regular investment. Who's going to custody it? Who's going to take on that risk? How are you going to do it? Where are you going to buy it? Are you going to buy it on an exchange? You're going to buy it on this place, Coinbase or Kraken? What's a Kraken? Like literally, people are like, you've got to be out of your mind that you think that we're going to send dollars from our endowment to a place called Coinbase or Kraken. And then suddenly, so this has been an issue all along. And then who's going to actually custody? How do we know they actually have it? Like, who's overseeing this? Where's the SEC? Are there laws and rules and tax rules around? Like, how do we do this? And there's so much uncertainty that And they don't even know where to mark to market. Like, are we going to market at New York Stock Exchange time or London time? It doesn't ever close. Like, where do we market? So there were so many issues to it that in one fell swoop, now you got BlackRock and Fidelity and Bitwise and all of these new ETFs that physically hold the Bitcoin in them, that they can just go and buy it like any other ETF, like any other stock, with the same brokers for the same price, settle it in the same way, custody it with their same prime broker, mark to market in the New York Stock Exchange time. No problem. Everything's solved. The only thing that's not solved is whether or not you can get margin on it, which you likely cannot at this point. So, um, that in and of itself this year has been such a monumental shift. And we're not seeing it in price yet. We just came through a halving. There's a lot of geopolitical uncertainty. We've got uncertainty with the economy. There's macro factors that are involved in it, whatever. But the point is that I know of institutional investors that are now starting to do what we call dip their toe in. They leg into a trade. What do? They leg into it by buying a little bit easily. So easy to buy a little bit, a few million, like 10 million bucks for a $15 billion hedge fund is nothing. So they just leg into it, and then it forces them. It's on their sheets every single day. And every single day they come in, they see this in their portfolio, like, okay, I got to do the work on this and decide, am I just going to blow it out, or am I going to actually start adding to this position in earnest and make it a core position? Like, which way am I going to go? It's forced them to do the homework on it. And so as you have more and more institutional investors do that, they'll understand it better. As they understand it better, more money will come into the space. It'll just kind of snowball. And it will happen slowly over the course of the next 12 to 18 months, I believe, but it's happening. And ignoring all the geopolitical and political and economic factors, that is happening. And it's just a question of, I don't know where price goes, but the most important part is that you get more people involved in the protocol that understand it better. And that's what grows it. And that's what makes it a true store of value, at least in this world that we live in the US, where that's what it's being treated as an investment. Understand the money, understand the manipulation of money, understand what the problems are with fiat currency and debasement of it, and then you'll understand why Bitcoin. So that's the first thing, and once people can understand that, it's a small bridge to understanding why Bitcoin, and most of them will make that. They'll understand, once they understand what Bitcoin really is, they'll make that small walk across that bridge themselves. They'll be like, oh, no wonder. Okay, now it makes sense to me.
One of James Lavish's most profound realizations came after watching a powerful interview between Jeff Booth and Anthony Pompliano, a moment that, in his words, changed his entire perspective. The core insight: despite all the incredible technological progress, automation, faster networks, life feels harder, not easier. Wages stagnate. Debt balloons. Purchasing power quietly erodes. Why? Because the money is broken. Now, let's go back to the interview.
Bitcoin catches on grassroots in areas that need it, areas of oppression, areas of high inflation, where people have to flee their countries when because of oppression, dictatorships, whatever, and they're trying to leave, but they have to leave everything behind. Where with Bitcoin, if you just have a phone and an internet connection, you can take your whatever investment or capital or cash you have, you can get it into Bitcoin. And then with just 12 or 24 words of unlocking a seed phrase, you can take that anywhere in the world. And you're not even taking it. It's accessible anywhere in the world. It's not even like you're porting it anywhere. It's it's available as long as you have an internet connection. So that's one part where you've got people who are they're in extraordinary inflationary environments where their value of their base currency or local currency is devaluing so rapidly in places like you've seen it in Venezuela, and you've seen it in Lebanon and in Egypt, and like you see like these places where their currency just devalues so rapidly. But if they can put it in Bitcoin, it doesn't matter to them if Bitcoin is doing this, because it's doing this as it's appreciating, whereas their own currency is doing this as it's depreciating. And so what does it matter to them? They'd rather, if you're going to have volatility, you'd rather have volatility in a rising asset than a decreasing asset. I start migrating towards Bitcoin, and I'm like, okay, this really is the one that makes sense. And so I take I take what I've invested in there into Bitcoin. I start doing research on Bitcoin. I'm listening to Bitcoin podcasts. I'm reading Bitcoin blog posts. I'm on Bitcoin Twitter. Don't know anybody. I have like maybe a couple hundred followers. And I'm just following a bunch of people, who I can, to start like reading about it. And something pops up. I'm following Pomp, and Pomp has this interview with Jeff Booth. Okay, so I'm sitting on the edge of on my bed. I've got the video playing, and I'm sitting on the edge of my bed. My wife's out making dinner or whatever, and she's like, and I'm the one who usually cooks actually, so this is really unique. But she's like, hey, what are you doing? You want to come help? I was like, hold on a second. Actually, can you pause that? Come here and look at this. So I'm like 20, maybe 30 minutes into a 40-minute video. I'm like, you got to see this. And she's like, what? So I rewind it, and we watched the whole thing all the way through on the edge of the bed, just with my laptop. And at the end of it, everything kind of clicks into place for me. And she looks at me and she goes, oh my God, do we own enough? I was like, I'm so sorry that I ignored you so years ago. But anyway, so the point is, what clicked for me? What clicked for me, Stefan, is the idea that, okay, I get Bitcoin. Okay, I get why it's immutable, it's decentralized. Okay, store value. Okay, I get it. Digital gold. Okay, I get it. But what? Like what's the catalyst here? And so what really made, and I've told Jeff, I'm good friends with Jeff now, and which is really kind of neat now going forward because our community is so small. But and I've told him this, and what really clicked into place for me was this idea that we have, the natural progression of technological advance means that you've got technology that's doubling in efficiency every 4 years. Is that right? Moore's law.
Yeah,
And
something.
and I don't want to quote it wrong, but basically the massive advances in technology are happening, right? And as those advances in technology are occurring, you have increased productivity for less energy, basically. So we're creating more through technology with less input. We're getting more output. Yet at the same time, you've got this system that depends on inflation, which means you need to have like the productivity has to rise in order to tax whatever. But basically, things have to become more expensive, okay, in order to manage the past debt, because you need more dollars to pay off debt that you've just amassed. So you've got this increasing pile of debt, and so you've got this force that's inflationary, which is the market manipulation. So now go back to my real life lessons in 1998, and then 2008, and then in 2020. Now you go back to the real life lessons of, oh my God, they're expanding the money supply so rapidly. So that's happening over here. While over here, you've got the advancement of technology that's creating deflationary forces. Like you're getting more for less. And they're colliding. And so what is the answer? The answer is Bitcoin, because it can't be manipulated, and it will allow for this, utopian future of us creating so much output for a lot less work. And so, but the money is it's so corrupt, it's so manipulated that it doesn't allow for this to occur. But Bitcoin does. And so it's not just an investment, it's not just a store of value, it's actually the answer to that question of why are our lives not getting better even as technology advances so rapidly? How is that possible? Well, it's because of the manipulation. And this fixes it.
James Lavish concludes with a powerful insight. Most people won't truly understand Bitcoin until they first understand Fiat, because Bitcoin isn't just an asset, it's a response to a broken system. And once you start asking the right questions, why does money lose value? Why is debt growing faster than the economy? Why do we need inflation at all? Then Bitcoin starts to make sense. The leap from fiat confusion to Bitcoin clarity isn't that far. Once you see the problem, the solution becomes obvious. Thanks for watching if you found this valuable. The next video is even better. Click it now and let's keep going.